This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Coveil. Not filtered, raw, honest. That's my passion. WeWork, a company that I've not paid attention to since its founding. Maybe the founding was 2011, but I have paid attention to it recently. Its IPO has been scuttled. No IPO planned. If you go read some of the stories online and take a peek at the financials, looks like this thing is destined for the graveyard. If you're not familiar with this baby, it was something to the effect of, let's have all these co-working office spaces around the world. Let's give business owners, landlords, the security of long-term 15-year leases. And then all the woke millennials will roll in to drink free coffee and free beer while they work on their freelance gig opportunities. They will then hold hands, kumbaya, and wear their gender-appropriate name tags, and everyone will have pronouns that are appropriate as well. This was the vision of a very long-haired guy who seems to have been the ringleader of something really special, at least for a brief moment in time. And now that time seems to be up. I'm not here to rain on anyone's parade or say somebody was bad for taking a high-risk investment. That's not what the point is. In January of 2019, WeWork, as a private company, was valued at $47 billion. But then, as it headed towards IPO status in the summer of 2019, the financials became clear. The due diligence uncovered a governance structure that was laughable, to say the least. And now, running out of money, unable to pay for all these 15-year leases around the world to allow the millennials to come out and hang out and hold hands and kumbaya and all that kind of crap. Now the valuation is $8 billion. Wow, that's like an 80% haircut in less than a year. That's pretty damn crazy. Nobody would have wanted to get stuck under an IPO that was set to be valued at $50 billion, and now the thing is worth less than 10, and the reality is it's probably worth far less than that. Because at the end of the day, this was one big coffee shop. Real business is made by real people, and real people don't need to be around other woke millennials singing songs, holding hands, and drinking free beer. Now, it looks good on paper, and if there's enough people that want to support it, just like if there's enough people that want to play video games, then I would not ever knock the business leaders for launching that type of business. But common sense had to have said to somebody, hey, this might not work. So now we're in the cleanup phase, the digging around phase, the graveyard phase, the looking for the dead bodies phase to find out what happened. Okay, so there was a young CEO. He got a lot of money, and he launched this thing. That's one aspect. That's not that interesting to me. Because if you're a young guy and you get a lot of money and you get to launch a worldwide brand, go for it. If it works, you're the next Bill Gates. If it doesn't, no one remembers. I mean, in this day and age, nobody really remembers. Google remembers, the internet remembers, but most people, they just forget. So you take your swing, you take your free cash from the big investor, you roll with it. If it doesn't work, so what? That's the WeWork CEO view, the CEO who is no longer the CEO. But the interesting story to WeWork is not WeWork. It's the guy that funded WeWork. Masa, the CEO of SoftBank, a Korean-Japanese guy of Korean ancestry, born in Japan, went to school in America, a very smart guy. In the late 1970s, out of his college dorm, he develops like one of the first language translators, like a portable calculator, like language translator. An electronics firm gives him $1.5 million. By 1981, he starts SoftBank. This is Masa's baby. Masa is his nickname. He makes a bunch of investments. He makes some money. He gets into the dot-com era. And then everything goes crazy. At one point in time, Masa, during the dot-com era, after making all these investments, Yahoo being one of them, for a brief moment in time, he's worth more than Bill Gates. And then the dot-com crash happens. He loses $70 billion worth of net worth. The biggest loss by any human ever. He lost 99%. 99%. Now, I'm sure he still had a few bucks in his pocket, a few million left over. But wow. But you know what he does after he takes that hit? He then turns around in the 2000 year, I believe it is, right after the dot-com crash, and he invests $20 million in a then fledgling Alibaba. An Alibaba that had a couple dozen employees, no revenue, no business model, nothing, absolutely nothing, except, as Masa says, Jack Ma. And he said, you know, I looked at Jack Ma in the eyes. He had that light, that fire, that charisma. And so Masa made the bet. You probably know where this is going now. All those years later, SoftBank owns 30% of Alibaba. That $20 million investment is something north of $120 billion today. A 300,000% return, something crazy like that. Now that is some serious up and down. Now you could argue Masa made the big investment during the dot-com era, lost it all, 99%, and then turned around literally within a year and made an investment in Alibaba, that has now made him one of the richest people in the world and one of the most successful venture investors. So now, with all of that extra capital, he takes stakes in things like WeWork. He goes for the next home run. He is the most aggressive venture capitalist / trend follower that there is. This guy is balls to the wall. A very traditional Jamie Dimon at JP Morgan, or some of the more traditional venture capital firms in Silicon Valley. It's hard to compete with a guy who loses 99%, which is $70 billion worth of net worth, and then turns around and makes probably the single biggest investment ever. The single biggest trend ever, or at least for a company, for him himself. What a win. Now, this is where he gets the latitude to take a chance on the WeWork guy. Now, we can all sit around and we can say, oh my God, SoftBank, they're so stupid. They made an investment in WeWork. It didn't work out. They didn't know if it was going to work out. They took a certain risk, and so far it's not worked out. Now, your question that you might be thinking to yourself is, hold on, this guy lost 99% the first go-round, and then he perhaps gets lucky with the Alibaba investment. Who's to say he doesn't do the same thing all over again? Good question. I don't know the answer. It sure looks like, though, now, with a certain maturity at SoftBank, at least maturity in thinking in terms of risk-taking, They are investing in companies that do have proven track records. WeWork being an example of that not being true. So it will be interesting to see how it all fleshes out. But if you look at a guy like Masa and you think about trend following, and let's play the exercise out as to who could possibly end up being the richest man in the world. Maybe it will continue to be Jeff Bezos. He is on an upward trajectory that looks like it can't be stopped. But these guys like Masa who have enough capital to place a wide assortment of bets in really big things, this is the trend following mindset, has a chance to beat everybody. Now, he must have some kind of a risk constitution, a personal risk constitution that is absolutely amazing. Like he has something that most people don't have. But here's the funny thing. I would argue that what he has, we all kind of know. I've written about these attitudes, and I'm going to read a few quotes from my book, Trend Following, my 5th edition, that I think will put you in the headspace of a guy like Masa. Now, I've not met Masa, but it's pretty easy to observe what he's done. He's a big risk taker. He's a trend following trader. He's a venture guy. That's what he does. But to do that, you have to have a mindset. I'm in chapter 10 of my book, Trend Following, on trading systems. The opening quote to that chapter: if you don't risk anything, you risk even more. If you don't risk anything, you risk even more. Because if you just sit there, someone's going to eat at you. Someone's going to attack you. They're going to take it from you. So even though when Masa lost 99% during the dot-com bubble, he knew that he had to keep going. That is extremely tough to do. He did it. Now here's another one. This is from a guy who was with Campbell & Company, one of the longtime early pioneering trend following traders, and a guy who helped me to get my data for my Turtle Trader book, the performance data, that unique data in the back of the Turtle Trader book. Their quote: "There is no such thing as a risk-free investment. The real issue is not whether you want to take risks, but which risks and how many of them are you willing to accept." Right back to the Erica Jong quote, the same mentality. Now here's another one that I love that is right in the Masa mindset. Nicholas Darvis, 1959. "I have no ego in the stock market. If I make a mistake, I admit it immediately and get out fast. If you could play roulette with assurance that whenever you bet $100, you could get out for 98, if you lost your bet, wouldn't you call that good odds? I never bought a stock at the low or sold one at the high in my life. I'm satisfied to be along for most of the ride." That's the venture capital mindset. That's the trend following mindset. This guy that I'm talking about today, the CEO of SoftBank, that's his mindset. You see, the guy that started WeWork, he has all of his personal ego invested in it. It must succeed. The guy who has SoftBank, he has a diversified portfolio of opportunities. If WeWork shits the bed, he gets the hell out. He loses money, but you know what? His investors, those investors who helped him assemble that $100 billion vision fund, SoftBank's vision fund, those investors in that fund, do you think they actually believe that every one of the investments in the fund will be a success? Hell no. They know what this guy Masa's track record is. They know he's a ballsy guy swinging for the fence. That's the whole damn point. How do you get success of immense world-changing scale unless you swing for the fence? And yeah, you can go broke doing that. So while I'm talking about right now, Masa, the guy who made it, other guys haven't. Other guys that lost a fortune during the dot-com bubble did not turn around and invest a huge chunk of money in Jack Ma 19 years ago. He did. He reaps the spoils. Is that luck? Is that skill? Is that genius? Is that crazy? History will tell. or maybe not, history will tell. You see, this is one big game. The game of money. Now, you can sit back and you can say to yourself, I'm working a job, I get paid a certain amount each week and all that kind of stuff. Well, that's great. No one's knocking that. But to get to the crazy levels, money becomes a little abstract. You can't think every day about what it means or what you can use it for to buy or to live off. No. It's a tool. And you can't allow yourself, right back to Richard Dennis and the Turtles and their position sizing algorithms, you can't allow yourself to feel one thing when you're trading $100,000 and another thing when you're trading $1 million. You adjust based on the money that you're dealing with. But of course, the more money you have, like this guy Masa, the more scale you can have. And then that's where the story gets really interesting. But don't ever forget, at the heart of this, it's trend following. And don't, and this is a side tangent, don't tell me about trend following on 1 hour bars or 15 minutes or some prediction nonsense. The numbers of emails I'm getting recently from people who say they understand trend following, or they say they're applying it, and then I ask what their system is, 9 times out of 10, they're trading some variant of some minute bar with some predictive technical analysis bullshit that they've pulled from some textbook that no one else has ever fucking traded. And they call this trend following. I think I'm going to have to go on the warpath because the numbers of people that have absolutely no idea what trend following is, but declare that they are trend following traders, off the hook. Day trading currencies is not trend following. Day trading currencies is bullshit. If you're day trading currencies, you're a gambler. Just go to Vegas, go to Macau, go to the Marina Bay Sands in Singapore, and sit and drink some booze at the slot machine. You probably got about the same odds. And if you're listening to me as a day trading currency trader, why? Why are you listening to me? Actually, I know why you're listening to me. You're listening because deep down you know what you're doing is bullshit and you're looking for a way out. So for that, I thank you. Keep listening. Hopefully one day it will wear off on you. Maybe you'll have to lose all of your money first and then go work at the 7-Eleven or the Circle K to make it back selling those damn sandwiches or something or selling Cokes to people. And then hopefully one day you'll get enough money back to do it the right way. Tangent over, I apologize. Now this one's another great Masa of SoftBank precept from an individual who has appeared on this podcast multiple times, somebody who I have met with multiple times. He appeared in my film. He's appeared on this podcast, Jim Rogers. And Jim says, nearly every time I strayed from the herd, I've made a lot of money. Wandering away from the action is the way to find the new action. Page 269 of my 5th edition of Trend Following. Just one of those little nuggets. Let me read that again. Just let you sink that one in. Nearly every time I strayed from the herd, I've made a lot of money. Wandering away from the action is the way to find the new action. If you're sitting around right now trying to make a traditional investment by reading news, following Bloomberg, listening to Kramer, turning on CNBC Asia every day, if this is how you are looking for how to make an investment, it's already over. Those people selling you, they got in really early. You're the mark. You're the mark in the sense that you are the guy that they want to buy a lot of whatever at the top. That's ridiculous. Don't do that. This one I love from one of my favorite Zen pioneers, Alan Watts. Say, what does a Buddhist pioneer have to do with trend following trading? My friend, everything. The only way to make sense out of change is to plunge into it, move with it, and join the dance. Isn't that what this guy, Masa, has done in his career? Now, he's spectacular at his understanding of that Watts quote, at the risk inherent in it. He gets it deep in his bones. We all wish we got it like he gets it, but we can learn, we can adjust. Look, there's always a little bit of luck in this life, and becoming a billionaire is certainly a lucky proposition. But everyone can figure out a way to make $1 million. At least for those people that are awake, for those people that really want to try. If you really want to try, which is not the vast majority of people, but if you really want to try, you can get to that first $1 million. And finally, in the Masa spirit, I want to quote one Jerry Parker, the most successful of the turtle traders. This is a quote that I put in my 5th edition of Trend Following, which I really love. And it gets right at the trend following venture capital mindset. And he's speaking about trend following. The broad application of these principles globally in markets all around the world, Chinese porcelain, gold, silver, markets that exist, that don't exist today, markets that others are making lots of money in that we're not trading. We will eventually start broadening out and realizing that trend following is a great way to trade. What other way can you trade and get a handle on risk? What he's saying is Chinese porcelain, some other arcane market, the trend following mindset is the only way to be the next Masa or the guy that has 1/1,000,000th of the success of Masa. You got to take your shots. You got to step up to the plate. You got to swing. And you have to know that you're going to fail a lot. Now, you might not want to do what Masa did and come close to bankruptcy, losing 99% of his net worth. But maybe that's really how it always is for those that make it out on the big side. It's being aggressive. And even when things look really bad, being aggressive is better than just sitting on your hands. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.